Welcome to a special edition of Follow the Money. I'm Eric Bowling. This is a Fox Business Alert. Dow futures down more than 200 points, pushing 300 points after a massive sell-off today. Tomorrow's already looking bad. The trading day begins anew in Asia, and red flashing arrows across the boards. Hong Kong's Hang Seng just opened within the hour and is down 7%. Tokyo Nikkei index down almost 5%, and Korea's Kospi is down 7%. Here in the U.S., the Dow took a massive tumble today as the debt crisis and credit downgrade turned into a full-blown market catastrophe. Joining me now live from the New York Stock Exchange is our very own Fox Business's very own Sandra Smith. Smitty, thank you for staying up late with us. Very important story. We're watching the Dow futures tumble again, Smitty. What should we expect tomorrow morning?
I'll tell you what, it would be an understatement to call the mood down here on Wall Street today somber, and it looks like it's going to be another ugly open for trading tomorrow. We're watching the stock index futures right now slightly off their lows of the overnight session, Eric, but just moments ago we saw the Dow futures plunging as much as 280 points. So we are again seeing heavy selling kicking in here in the overnight session. The S&P and the NASDAQ also down significantly. Overseas is also taking a cue from the huge sell-off that we saw on Wall Street trading today. The Kospi out of the gate, Eric, falling 5%. It continues to sell off big. The Nikkei in Japan out of the gate plunging 4.4%. And later on we saw the Hang Seng index in China open. It too plunged, not by as much as the other Asian markets, but still down 2%, enough to push that Chinese benchmark into bear market territory. All of this, Eric, on a day where we saw the Dow Jones Industrial Average fall 635 points. Eric, that was a loss of 5.5%, the biggest single-day trading loss for our stock market averages since 2008. So it was a significant day for selling, and in fact, the S&P and the NASDAQ, the broader market, saw even bigger selling. The Dow Jones Industrial Average falling nearly 7% on the session. But Eric, perhaps the biggest story of them all in the overnight session is oil and gold. We continue to see heavy selling in the oil market. Oil fell 6% in today's session. And guess what? In the overnight Globex session, oil is again plunging 6%. We're now seeing oil futures trading under $80 a barrel. You're looking at 76, 77 and change tonight. And guess what? Everyone continues to still flock into those precious metals, Eric. Gold continues to surge tonight. Not only did we close at a new record high today, above $1,700 a troy ounce, but those gold futures continue to extend their gains tonight. We continue to see gains of over 1% there. So the safe haven trade is still on. People are still selling out of oil. And Eric, right now, it still looks like we are setting up for a significant sell-off when markets open tomorrow, right here at the New York Stock Exchange at 9:30 Eastern time.
Right, Sandra, you've been there all day, and I need to ask you, what was the mood? You saw traders leaving the floor. I've been through this. I know the feeling. You kind of walk off the floor going, boy, I hope tomorrow's an up day, knowing very well that tomorrow's probably going to be a down day. They must have been a little bit shaken, rattled, stirred. Did you see that in their faces?
It wasn't pleasant, Eric. I mean, I sat here and talked to a lot of traders. I've been reporting on this trading floor for years. I grabbed a lot of traders I know, and a lot of them just shook their head and said it was too ugly to talk about. It's not a pleasant feeling down here. The mood is souring. When traders walked onto this trading floor this morning, I hate to say it, but some of them were rather optimistic. They went in and said a lot of their trade desks were buying on the open this morning. If that was the case, a lot of them, I hate to say it, got killed after that more than 600-point sell-off. So it was not a pleasant day. Traders, their mood really reflected that, Eric. And it was just brutal for confidence, not just for traders on the floor, but for investors. You know, mom and pop at home, they see this sell-off, and it is just brutal for investor confidence to yet again see a sell-off in the stock market like this. And now with where futures are in the overnight session, Eric, it looks like we're going to wake up and see more selling in the morning, unfortunately. Yeah,
I think so. I think if what we saw earlier, you're 100% right. Those traders probably did step up and try to buy a little bit early.
Yeah.
I will tell you, there was an absence of buyers from about 10:30, 11 o'clock on. And especially after Mr. Obama took to the podium, people were waiting to see if he announced some sort of quantitative easing 3 or some sort of special monetary function, and he didn't. And when he didn't, the market just fell apart from there.
And it's a great point, Eric, because if anything that these traders can hang their hat on this week, it's what is the Fed going to say tomorrow? Unfortunately, there's not a whole lot of hope that they'll hear what they want to hear. guys on this trading floor said, hey, if he says anything about QE3, that would be fabulous for these markets and possibly could indicate a turnaround. Unfortunately, they say the chances of that are pretty slim at this point. So, you know, it's a wait-and-see mode for these markets.
Hey, Smitty, hang in there. Stay with us if you don't mind for the hour. You're doing a great job there at the corner Broad and Wall. Appreciate your time. We'll get back to you throughout the night. If we hear anything, you'll give us a call, too. We'll get back to you, though, Smitty. In the meantime, crude oil settled at its lowest price today since November 2011. $81 a barrel. You think that sounds cheap? How about this? Crude oil trading another $4 lower, pushing $76 a barrel. Joining me now, the former president of Shell Oil, John Hoffmeister. Hey, Hoff, you know, I've been around oil a long time. I don't recall seeing a price go from $100 a barrel to $76 a barrel in this short of time. Do you, sir?
The volatility, Eric, is driven by people's lack of confidence, loss of confidence, and in fact, in many ways, it's a repudiation of the kind of political leadership that they're seeing that gives the economy little or no hope for the future. So may as well sell, may as well get out of holding barrels, because those barrels are just going to be worth less and less, given the fact we have no economic leadership that's coming from the political elite of the biggest economy in the world. They should all hang their heads in shame, considering where we were 6 months ago when the economy showed signs of growth, when late last year we had growth factors driven by business, and then what do we get all the last 6 months? Taxes on the wealthy, more regulations, more stifling of business. These people don't know what they're doing to put this economy in a deep rut.
All right, sir, and you know, the viewers out there are probably looking at that oil price saying, hey, this is a good thing. My pump price is going to come down going forward. Sure, it will, but we need to point out that the reason for the sell-off in oil is not a good thing. It's a slowing of the economy and likely an increase in the jobless rate in America, because when the economy slows, companies just don't hire, right, sir?
You said it. They may have a cheaper pump price, but they're going to have fewer jobs, to have fewer incomes, to be able to buy the cheaper gas. That's not good for the economy. I don't know what the right price is. Nobody ever does. But when you have a slowing economy, it's going to show up in the jobless rolls. It's going to show up in the foreclosures that come when people don't have jobs. And there just is no sign of a turnaround in the fact that our leadership really doesn't understand business. They don't understand how business leaders make decisions. And with the trillions of dollars, here's the issue, trillions of dollars sitting idle, an infrastructure that's falling apart in this country, domestic energy production going less, not more, and more regulations and more stifling of what economic factors could deliver growth in this economy. It's upside down, Eric. That's the problem.
John,
it's upside down.
Hang in there a second. I want to talk about gold a little bit. Gold reached a new record high today of $1,723 the ounce in trading. Joining us now is Peter Schiff, CEO of Euro Pacific Precious Metals. Peter, after hours, gold up another $20-something per ounce. Would you step in? I have to ask you this because everyone asks me, and I don't know what to tell them here. I think that gold is overdone now on the upside. $1,742 up another $30 an ounce after hours. Do you go ahead and jump in and buy now?
Well, look, I've been buying since it was under 400, and since it hit 500.
That's not what I'm asking. Peter,
I know, but
you're one of my best friends in the trading community. Don't tell me what you did last year. Tell me what you do right now.
Let me finish your question. Ever since it hit 500, people have been asking me that exact same question, and I'm going to give you the same answer. It's not too late to buy. Gold is going a lot higher. The dollar is going to lose a lot more value, and I disagree with your other guest when he said the economy was growing 6 months ago. It wasn't. We were hyped up on stimulus. It was artificial, and now the stimulus is wearing off. We are in a deeper ditch than we were before the stimulus and the bailouts. You know, a lot of these financial companies that they bailed out, companies like Bank of America, they're going to fail again. We're going to have to bail out all these financials. It's going to cost us even more, and we're going to dig the economy into a deeper ditch.
All right, very quickly, not a lot of time. I'll get back to you, but I have to ask you this question quickly. You think we're going to hit a double-dip recession? You think we're on our way to a double-dip? Is that what you're telling me?
We are in a depression. It was interrupted by some stimulus that actually exacerbated the underlying economic fundamentals. We are going to be in this depression for a decade, maybe more, if they keep doing the wrong thing. What we need is to clean out all the excesses. We need higher interest rates. We need lower real estate prices. We need more savings. We need more investment. We need more production. We need more exports. We're not getting any of that.
We need a lot, sir. We need a lot. And frankly, I'm not sure the administration has any idea on how to fix it. We're going to have to say thank you.
They are clueless. And his speech today was pathetic.
I agree with you, and I think that's when the downturn really took off, really accelerated to the downside. I'm going to have to say thank you. I'm sorry, guys. We ran out of time. John Hofmeister and Peter Schiff. Who's running the country into the ground? One of the most successful investors in Wall Street history points a finger at Ben Bernanke and Tim Geithner. Take a listen to one of the wisest men I know, Jim Rogers.
George, Mr. Bernanke has never been right for he's been in the government for 6 or 7 years. He has never been right. If I came on your TV show every week and was wrong 8 or 9 weeks in a row, you'd probably stop inviting me. Mr. Bernanke has been wrong 300 weeks in a row. He has never been right. If you get your advice from Mr. Bernanke, George, you're going to go broke very quickly.
And you're apparently not a fan of the current Secretary of the Treasury either.
Oh, my God, you're bad for my nervous system, George. No, of course not. Mr. Geithner was head of the New York Fed for several years. The New York Fed was the group which was in charge of Wall Street and the major commercial banks. He sat there and saw all this happening. He's part of the problem. It is astonishing to me that Mr. Obama ran on a platform of change, and he's brought in people who caused the problems and are there now supposed to resolve the problems.
Jim Rogers made those remarks in March of 2009, more than 2 years ago. Joining me now on the phone from Singapore, legendary investor Jim Rogers, chairman of Rogers Holdings. Jim, first of all, let me just point out, I'm watching these Dow futures tick down 280 points in the futures. Add that to fair value. You're over 310 points lower right now as we speak. Is there a short-term bottom, sir?
Well, I'm not buying yet, but certainly, Eric, it looks as though we are turning into a selling climax. And if we can hold our nerve and it goes down 2 or 3 more days, I will have to cover my shorts.
All right, fantastic. Now, a long time ago, you said the only thing you really should be invested in right now is farmland. Boy, do you look smart saying that. It wasn't even that long ago. It was on this show maybe about a year ago. Jimmy, what about it? Are there any good investments out there? The metals, gold, anything?
Well, when the market hits bottom, I will probably add more agricultural. Bernanke doesn't know any better. He's going to print more money, and so are other central banks. And when they print money, you better own real assets, whether it's rice or silver or natural gas. I don't like saying this, Eric, but we're dealing with people who don't understand economics or finance or currencies.
Jim, you and I both know this. We've been around a long time, 25 years for me, probably 30 years plus for you, 35, whatever it is, sir. You know what's going to happen? You know there's going to be QE3 when the market least expects it, and that's going to catch a lot of the shorts by surprise. Do you agree with me?
Well, that's why I say we may have to cover our shorts. I may have to cover my shorts if it keeps going down another 2 or 3 days. Yes, they will pull something out of the hat. You see gold going up like a rocket. I own gold, but it's getting ahead of itself. No, you're exactly right. One has to be careful when you see a collapse like this, a panic climax bottom.
Hey, Jim, I talked to John Hofmeister a minute ago. We were talking about the price of oil sliding from about $100 a barrel just a few days ago, now trading after hours $76.50 a barrel. You know, on one hand, it's a great thing for the economy because people will be able to fill up their cars cheaper. But on the other hand, the reason why it's going down is more alarming than the benefit you're going to get at the pump.
Oh, absolutely. It's because there's panic in the world, and then economies are going to slow down dramatically everywhere. No, this is not good for the world, but these guys have bungled it. You know, the only good thing is, I mean, first of all, I own oil, so it's not good for my portfolio. Fortunately, my shorts are going down more. But when the bottom hits, I'm afraid we all have to own real assets because they don't know what else to do except print money. That's not good for the world.
Let me just tell you how smart that is, Jim. That's the only thing that you can own when the bottom hits. That and maybe some very, very high-profile, high-dividend-paying stocks, maybe a telephone stock or two, but nothing really risky, right?
Well, you can own stocks if you want. In the 1970s, stocks did nothing. Stocks went down for most of the 70s, but commodities had a staggering bull market, one of the great bull markets in history. No, Eric, I'm short stocks and I own commodities because, in my view, we're back to the 70s again, which was not good for stocks.
All right, we put up a board there. That was the closing prices. I'm going to tell you right now, the price right now we're looking at the Dow down 280 points in the futures, 30, 40 points for Fair Value, 290 now. The S&P down 30 additional handles after the close. Give you a gold price right now up $31.50 per ounce, 17.44. Oil down $4.50. Jimmy, these things are decoupling. Gold's going up, oil's going down.
Well, I own both of those. I happen to be in Asia, as you pointed out. But let me tell you, I can look out the window. I can see the stock exchange down 4 or 5% too. So it's not just happening in New York tonight. It's happening everywhere.
Hey, you know what, Jim? I appreciate your time. Thank you for spending some time on Follow the Money tonight.
Anytime, Eric. Thank you.
All right.
Bye-bye.
Thank you, sir.